This is Horizon's Middle East and Africa, our top stories this morning. Truce talks shift from Cairo to Doha. Meanwhile, Israel closes a humanitarian crossing into Gaza after Hamas fires a rocket barrage. Asian equities gaining after softer than expected U.S. jobs data revives bets that the Fed will cut rates this year. Plus, we speak exclusively to the CEOs of State Street Global Advisors and Riyadh Air later this hour. Well, it's just gone 8 a.m. across the Emirates. I'm Joumanna Bercetche here in Dubai. Now, you may have noticed that our show has a different look and name this morning. So welcome again to Bloomberg Horizon's Middle East and Africa. Our goal is to bring you the top stories driving global markets, from central banks to earnings, alongside storytelling and analysis of the news shaping the Middle East and the African continent. Now, it is a fraught time in the region geopolitically, which has implications on the balance of global power and shifting alliances. We are keeping an eye on the price of oil and a possible inflationary resurgence, as well as tracking the flows of money into and outside the region. We aim to keep you informed and ready to go with the knowledge of what is on the horizon. So let's start. Let's take a look at how markets are faring. Of course, the big event on Friday was that non-farm payrolls print coming in lower than expectations, a slight uptick in the unemployment rate, which was good for risk assets. After all, we're back to the bad news is good news for markets. So we saw an uplift for S&P into the close, up more than 1%. NASDAQ up more than 2% in trading, almost 2%. You can see futures building on that positive momentum, up about 9 basis points in trading. The NASDAQ trading around flat, but still building on from that positivity on Friday. The dollar also in focus. We saw the DXY dip, especially versus the yen. And you can see right now we're sitting just below 154, slightly weaker for the yen today versus the US dollar. But of course, last week was a theme of a yen resurgence versus the USD, gained around 3%. That is the biggest monthly gain we've seen since February. So a lot going on there, namely the weakness in dollar. But then, of course, we did have those double interventions come through from the Bank of Japan. So that is also on our radar. And then oil, obviously, we are keeping a close eye on how Brent crude is trading. $83 is where we're at right now. A couple of things on the horizon, if I may say that. We've got the OPEC meeting coming up in a couple of weeks' time. The market is not expecting any change in production or in output, but of course, things may change between now and then. Geopolitical risk premium building once more into the price of oil. Worth noting that the price did drop 7% throughout the course of the week last week. But then also, we have noted over the weekend that Saudi Arabia, interestingly, have once more raised the price of their selling price to some of their Asian clients over the course of the weekend. So that is their attempt, again, to draw a line under this market. So that is in focus. But again, U.S. Treasuries, we had a very big week last week. And I just want to draw on this now. Treasuries are actually closed for trading because it is a bank holiday in Japan and UK. Won't officially start trading again until midday London time. But you can see from this chart here, we had quite a significant move in where two-year yields have gone over the course of last week, down 20 basis points, quite clearly failing to break through 5%. So down 20 basis points, keeping a close eye on that and what that means for interest rate expectations as far as the Fed are concerned. But let's also check in on how markets in Asia are faring. The Chinese markets are back from Golden Week. So Avril Hong is in our Singapore studio standing by. What is the latest there, Avril?
Yeah, Joumanna, as you mentioned earlier, we have Japan and South Korea on break today, but mainland markets are playing catch-up. And that is a reaction, I think, to what we got out of the Politburo meeting last week, as there were these signals of monetary fiscal support and that policymakers would be exploring fresh ways to fix the housing crisis. So today we saw the CSI 300 entering the lunch break with about gains of 1.5%. But the rally in Hong Kong, that was, by the way, its longest winning streak since 2018, taking a bit of a breather today. On the TAIEX, it's the likes of TSMC, but more importantly, Hon Hai, the iPhone maker, surging to a record high. And this is against the backdrop of what we're seeing from Apple, from AI, but also its own strong growth for sales. Let's flip the board and take a look at what we're seeing in currencies as well, because the offshore, onshore have been recouping some of the weakness in the past week. Onshore, of course, today just reacting to last last week, and we have that reaction also coming through from the Federal Reserve. We're seeing the onshore yuan moving away from the upper limit of the yuan fix. Of course, today we did get a PBOC coming through with a pretty strong fix, lowest level since mid-April, a bit of support there. That's what we're seeing in the Asia-Pacific.
Excellent, Avril. Thank you so much for the latest on those Asian markets. Now, turning to the political environment over here in the region, negotiations on a possible ceasefire deal between Israel and Hamas are moving from Cairo to Doha after weekend talks broke up inconclusively. Separately, Israel closed the Kerem Shalom humanitarian crossing into Gaza after a deadly attack by the armed wing of Hamas. So let's get more on this from Paul Wallace, Bloomberg's Middle East economy and government editor. Maybe let's just start with the state of the truce talks. Paul, good morning to you, of course. It appeared as though hopes were high going into the weekend. We had a first round of negotiations taking place within Cairo, but it looks like it didn't yield any positive results, and now the destination has switched to Doha. What is the latest? What can you tell us?
Hi, Joumanna. That does seem correct, that it's been pretty disappointing as far as the Cairo talks are concerned. Both Hamas and Israel made out that there were still big obstacles for the sides to overcome. The main one going into these negotiations in Egypt was Hamas's insistence that a truce effectively ended the war and that it would be a permanent ceasefire. That's something that's been a no-no for Israel from the very start of these talks months ago. It has always said that it needs to be able to completely destroy Hamas as a military organization, and of course Israel believes that there are still around 8,000 fighters and several battalions in the city of Rafah. So Israel has said that it will attack Rafah regardless of whether there is a truce of about 6 weeks.
So that's one aspect of it, but the other, of course, is that these attacks are still occurring. We found out over the weekend that Israel has indeed decided to close another humanitarian crossing because rocket attacks came through from Hamas. With that going on in the background, what does that do to further these talks when there's so much disruption still happening on the ground?
That could well undermine these talks. It was a pretty significant attack. 3 IDF soldiers died. They're the first IDF soldiers to die in a rocket attack for several weeks, if not longer. So that could well stall these talks. Hamas said it was the group that fired them. It's taken responsibility. So those fatalities could well add just yet another spanner to those works as the sides move to Doha.
The other decision that caught my eye over the weekend was the fact that Israel decided to shutter the operations of Al Jazeera within Israel. Significant decision. What prompted them to actually raid the offices and decide that Al Jazeera can no longer broadcast within Israel?
It definitely is a big decision. Al Jazeera has come under criticism from the Israeli government ever since October the 7th. Some far right members of the coalition have even effectively accused Al Jazeera of aiding and abetting the October the 7th attacks, claims which the TV station vehemently denies. But Netanyahu, Prime Minister Benjamin Netanyahu, essentially says that Al Jazeera's reports have been too in favor of Hamas and have undermined the Israeli state. It is a significant move. It's not universally popular, at least the timing isn't. Benny Gantz, a member of the War Cabinet, has said that while he supports shutting them down, it shouldn't have been done now because of the fact that it could well undermine those talks.
Yeah, just another example of how even within the Israeli government there are a lot of divisions about how this war needs to be handled. Paul, thank you so much for joining me. My first ever guest on the show, Bloomberg's Middle East economy and government editor, Paul Wallace. Okay, we are getting some breaking news. I just want to bring the line to you. Credit Suisse's Ulrich Körner is to leave UBS in coming weeks. That is a report that is out from the Financial Times. At this point, we don't have more details, but we will be keeping an eye on what this means. Also, bear in mind that UBS earnings are coming up this week as well. So we will bring you the latest from that story as and when. But still ahead on our show, we have two exclusive interviews. We'll be talking to State Street Global Advisors CEO Yie-Hsin Hung about prospects for the global economy and why they are reopening an office in Dubai. And Riyadh Air Chief Executive Tony Douglas joins us to discuss the carrier's progress towards its first takeoff in 2025.
Inflation's above target, but not nearly as much as it was, and certainly most people think it's going to head back to target as we go forward. So these are good problems to have.
175,000 is a very solid report. Some of the root of our frictions here might be there's a kind of a day trader's timetable and there's an economic timetable. For setting monetary policy, of course, you got to take a longer arc view on inflation, on employment.
Chicago Fed President Austin Goolsbee and former St. Louis President Jim Bullard speaking exclusively to Bloomberg. Well, Friday's jobs report showed U.S. employers scaling back hiring in April, suggesting some cooling is underway in the labor market. And of course, that was a big driver for global markets over the course of Friday's trading day. Let's bring in Oliver Kettlewell, Executive Director of Fixed Income at FAB Asset Management. Good morning to you. Great to have you with us on the show today. To my mind, when I look back at last week, there were two major events for the market. There was, of course, the Fed on Wednesday, but then that non-farm payroll print on Friday. So maybe let's just start with the jobs report. What does that tell you about the state of the U.S. economy and the fact that the labor market is actually beginning to show some signs of cooling at this point?
It's showing some signs of cooling, but also the U.S. economy is still really strong if you think about that number. And we don't think that this one soft data point is the magic inflection point that the market needs to rebound sustainably from here. It's one relatively soft data point set against really strong data that we've had for the first 4 months of the year, whether it be PMIs, retail sales, inflation, etc. So we think the rally that you saw at the back end of last week post the Fed and NFP is more about short positioning being unwound rather than the end of higher for longer.
So Mohamed Al-Arian was speaking to our colleagues on Friday, and he called this a Goldilocks report. And I think as far as the Fed are concerned, it seems very clear that they want to start cutting rates, but they don't really have the pretext when core PCE is sitting so sticky. What do you think Friday's report actually means for Fed policy going forwards?
So, look, the data is still too strong for them to cut right now. That's clear. We had 3 cuts penciled in at the beginning of the year. We were not as aggressive as the market with 7. But even now, we've scaled that back to 1 to 2. And I think you're going to see that come through with the Fed in next month's dot plot. I think they'll have to go from 3 to probably 2, even perhaps 1. Cuts are coming. That's the most likely scenario. But it's not coming to the back end of this year for sure.
So when I was speaking to some market participants last week, they said to me that the Fed and their communication to the market has been a little bit misleading. I mean, obviously, they did not have a crystal ball back in December. They didn't realize back then how sticky these inflation numbers were going to be. But the person that I was speaking to last week was saying that as far as these communications are concerned, December probably was a bit of a policy error out of the Fed because it led the market to believe that the Fed may be looking at more than 4, 5, 6 possible rate cuts for 2024. And here we are, we were only pricing in about 1, maybe now 1.5. How difficult has it been to trade off the Fed's policy communication?
Yeah, it's really difficult. It's been a roller coaster ride of returns for the last few months. We had the sugar rush returns at the back end of last year, as you mentioned, because Fed led us all to believe that cuts were coming this year, perhaps quite early on. This year has been a challenging year for fixed income. It's been okay for equities. Look, we've just got to take a long-term view. I know a lot of people say that coming onto the show. But at the end of the day, if you've got a trajectory where the Fed is going to be easing, that's a pretty good environment for both stocks and bonds if you take a 6-month view.
Yeah, so how are you positioned right now?
So we're overweight fixed income. income, we think it's a great time for fixed income. It's been a bad few years for bond investors, but going forward, we think that with yields at these levels, it's a really good time to be invested in fixed income, whether it be high yield to benefit from the soft landing, or even investment grade is giving you pretty decent yields right now. On the equity side, we're more neutral. We're less constructive there, and we're a bit more picky. We quite like tech stocks in the US and Japan equities as well.
Well, the flip side to that is there's a whole lot of supply that's going to be hitting the market. This week, you've got $67 billion worth of 10-year and 30-year USDs that are going to be issued. How do you think about the supply that's yet to hit? And does that sort of pose a risk to your long fixed income thesis?
It does in the short term. I think you're right, and I think that's why we're quite cautious. I mean, right off the bat, I said that the NFP number is nothing to get too excited about. I think in terms of the returns that we saw, because I think that the supply that's coming on board could now push yields higher. So the yields. I mean, you mentioned the 2-year at the beginning of your show. I think those 2-year yields could creep back up to 5%. With the supply coming on board, with CPI coming out next week. So, but again, I think if you take a 12-week versus 12-month position, 12 weeks, we're quite cautious. 12 months, we think it's going to be a decent time to be invested.
Yeah. One other announcement that kind of went a bit under the radar last week out of that Fed meeting was the QT announcement and the fact that they're slowing down the pace of quantitative tightening. Again, if we think about your thesis, perhaps that is mildly bullish to the market. Was it a surprise?
A bit of a surprise, but the Fed has always been tinkering with QT, and I think they're trying to find the right level. So I think the policy rate is the most important thing for markets. So that's what we're keeping an eye on, really.
Where do you think they end up ultimately, the Fed?
The interest rate, you mean, or the interest rate? We don't think they're going to get to their 2.5% neutral rate. We think it's a bit higher than that. But we certainly think it's going to be lower from here, probably somewhere in the range between 3 and 4.
Yeah, they just need to get going.
Yeah, exactly.
Oliver, thank you so much for joining me today. Wonderful to get your views. That was Oliver Kettlewell, Executive Director of Fixed Income at FAB Asset Management. Also coming up, Berkshire Hathaway's cash pile has hit a fresh record high. The highlights from the annual meeting of Warren Buffett's conglomerate coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Berkshire Hathaway's cash pile has hit a fresh record high at $189 billion. Billionaire investor Warren Buffett has long decried a lack of meaningful deals that would give the firm a shot at eye-popping results. Now, our deals reporter Manuel Baigorri joins us for more. I've got to ask you about this cash pile, $190 billion, almost $190 billion. That is a mouth-watering number. Why is Warren Buffett hoarding so much cash?
Yeah, indeed, Joumanna, it's an eye-popping number, and it keeps growing and growing. Well, it's very telling, probably on the back of interest rates being quite high and the expectation that they may remain high for longer than previously anticipated, plus the stock market being a little bit wobbly. That's making Buffett, as some investors were suggesting, potentially being a little bit conservative and stockpiling this big hoard of cash. At the same time, he was referencing to the lack of sizable deals. I mean, we all know Warren Buffett is very well known for making sizable mergers and acquisitions in the past across different sectors, and we haven't seen a significant one for a while. That partially also very telling of why he's keeping so much cash in hand at the moment. That said, deal making globally, particularly in the US and Europe, is improving. That could pave the way for some potential deployment of cash in a significant way in the coming quarters. So we'll see. But definitely a big number that keeps growing and growing for now.
I mean, with 190 billion, he can buy entire companies, multiple companies, and many of them are listed in the S&P 500. But one of those companies that I want to talk about, of course, is Apple, because Apple is Berkshire Hathaway's largest position, and yet they sold 10 million Apple shares over the course of the quarter. It's still their largest position. But what does the fact that they're selling down Apple tell you about what they think about the trajectory of where Apple is going?
Indeed, the largest holding from Buffett is Apple, as you well said, Joumanna. It remains, and he strongly said he's a believer in the company, and he mentioned the iPhone as being one of the greatest devices or inventions in history, and then he made it clear that he intends to remain a significant shareholder in Apple going forward.
Sorry,
I mean,
what?
the company has faced its own headwinds in the past here in China. We've seen how the company has faced a lot of challenges and an increasingly, challenging environment. So there is definitely some headwinds, but the company is still doing really well. He made some strong references to the company being an even better investment or even better company than other great companies like I think he mentioned PepsiCo or American Express, among others. So he still remains a strong believer in Apple, but he did cut his position by quite a bit in the last quarter. Some people were pointing out that there might be some tax implications around that disposal, but still, it's a really large holding that he's got into the company, definitely.
Yeah, well, they still got 905 million shares of Apple, so that's still quite a substantial sum. Our deals reporter, Manuel Baigorri from Hong Kong, thank you so much. Now for a look at some other corporate stories that we're watching today. HSBC's largest shareholder has voted against keeping outgoing CEO Noel Quinn as a director, suggesting its campaign against the lender will continue. Ping An Insurance Group lodged its protest vote during HSBC's shareholder meeting on Friday. That is after Quinn announced plans to retire. Ping An had called for HSBC to spin off its Asia operations, and that proposal was defeated during last year's AGM. Well, that's not all. Plenty more to come. Up next, State Street Global Advisors are back in Dubai. The chief executive, Yie-Hsin Hung, joins me for an exclusive conversation. This is Bloomberg. This is Horizons Middle East and Africa. Our top stories this morning. Truce talks shift from Cairo to Doha. Meanwhile, Israel closes a humanitarian crossing into Gaza after Hamas fires a rocket barrage. Asian equities gaining after softer than expected U.S. jobs data revised bets that the Fed will cut rates this year. Plus, we speak exclusively to the CEOs of State Street Global Advisors and Riyadh Air later this hour. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joumanna Bercetche here in Dubai. Let's get a check on how these markets are trading. The big event on Friday, that non-farm payroll prints, disappointing as far as the headline is concerned. And of course, that uptick in the unemployment rate took the market by surprise. But the reaction for risk assets was pretty positive. We saw a solid close for the S&P, NASDAQ closing almost up 2%. Today, you can see that these futures are trading sideways. S&P futures up about 7 basis points. NASDAQ not doing much. It also is worth bearing in mind that for much of the world, it is a bank holiday today. Japan is closed. Treasuries won't be trading until around 12 p.m. London time. So we'll talk more about that in a moment. But the other big focus for markets last week was the price action in dollar yen. We obviously saw a dip in the USD after that NFP. But then throughout the course of the week, we got 2 rounds of Bank of Japan intervention that sort of capped where dollar yen was getting to. It managed to trade below 160 and has sort of stayed there. So something to keep an eye on. 3% gains versus the U.S. dollar over the course of last week, its biggest gain since February. And then finally, Brent crude sitting at around $83, down 7% throughout the course of last week. But OPEC is coming up. The market really isn't expecting a lot of change as far as output production cuts are concerned. But it is interesting to note that Saudi Arabia over the weekend raised the price of where it sells crude to some of its Asian customers. So again, a reflection of how Saudi Arabia is trying to keep a floor under the price of oil and where it is headed to. Again, we spoke about two-year Treasury yields. I just want to draw on some of the price action we had over the course of last week, because you can see very clearly from this terminal chart, we have struggled to break through 5% meaningfully to the upside. Two-year Treasury yields down almost 20 basis points through the course of trading. Right now, the first rate cut is penciled in for around September, almost two rate cuts, 25 basis point rate cuts priced in by the end of this year. So markets pulling forward the timing of that first rate cut. But let's get a check on how Asian markets are faring. Avril Hong is in Singapore with the latest. Avril.
Yeah, Joumanna, it is a trickle-through effect in the Asia-Pacific as well as those Fed rate cut bets get pulled forward. Asia stocks are mostly running higher. Take a look at the TAIEX and the ASX 200 in Australia. But we're also seeing the mainland markets in focus. They're back from that Golden Week holiday, playing catch-up on the back of the outcome from the Politburo meeting last week, mostly positive. Those fiscal, monetary stimulus signals. Hong Kong's Hang Seng is flat, though, taking a bit of a breather on that rally. But let's flip the board and take a look at the FX space, because that, I think, is also something that we've been watching out for with the Fed in play, the payrolls as well. And despite the brief reprieve last week for dollar yen, we're seeing it nudging back towards 154, as you briefly mentioned earlier, Joumanna. And I think this is the focus switching back to that yield differential between the US and Japan. And that will be of consequence to dollar China, where we see the trajectory for dollar yen. Keeping an eye on the Aussie as well. We are going to hear from the RBA tomorrow, and Bloomberg Intelligence expects a reversal from the dovish tilt in March. And this is no thanks to that stronger than expected first quarter inflation print, Joumanna.
Lots of, central bank decisions to watch out for this week. RBA, Bank of England, Riksbank also in focus as well. Avril, thank you for the report. Well, the influx of hedge funds and financial firms setting up shop in Dubai continues. Businesses are drawn to the city's proximity to deep-pocketed funds, as well as the ease of doing business, tax-free status, and favorable time zone. Joining heavyweights such as Millennium Management and Exodus Point, asset manager State Street Global Advisors is reopening its Dubai office after exiting 4 years ago. Really happy to say that State Street Global Advisors CEO Yie-Hsin Hung joins me on the show. Good morning to you.
Good morning.
Well, let me just start off with the big launch for you. I believe you're opening up your offices in Dubai tomorrow. What prompted this move? Why come back to Dubai?
Well, this region is growing so rapidly. State Street has been in the GCC for over 30 years, and today has a very meaningful presence in Abu Dhabi, Riyadh, Oman, and we felt that Dubai was the right next space to open up. The focus around our business originally was servicing official institutions, but as you well know, the breadth and the growth of the overall sectors, the number of IPOs that have been very successful in the region is one of the reasons why we're just expanding and doubling the number of people that we have across the region in these various cities.
I recently moved over to Dubai myself, so you're preaching to the converted there about the increasing importance of the region. Let me just ask you this, because many funds and asset managers are sort of torn between whether they set their headquarters in Abu Dhabi or Dubai. Was Abu Dhabi ever a consideration?
Abu Dhabi has been a very significant location for us, and that's arguably where we got our start. So our investor servicing business across State Street is very much concentrated there. We continue to add resources. At the same time, in Dubai, the focus will be a little bit more on the asset management side. So it's very complementary for us.
Yeah. Well, let's turn to just general global outlook views. We have just been on the show digesting the non-farm payrolls print from last week. But I would say, for the most part of this year, the U.S. economy has actually surprised to the upside. It's been more resilient than people had anticipated. How do you see things panning out the rest of this year?
Well, we took away a couple of things from the Fed briefing. One, that the Fed chairman said policy rates are in the right place, meaning they're prepared to hold or to cut, but not to hike. Secondly, there's a great deal of focus around the strength of the labor force, and we think that's very good because the dual mandate is coming more into view for the Fed, and then importantly, the reduction of the balance sheet that is supposed to start in June, which has led us to feel that we believe, and this is an out-of-consensus view, that the Fed may begin cutting rates in July, earlier than perhaps what the market suggests, just because the strength of the inflation print, really, if you focus backwards a year, last March, 4.8%. This March, 2.8%. Notwithstanding some of the numbers we've seen, we're very close to the target rate.
So if that does actually materialize, what investment opportunities does it present? The market is not pricing in a June start.
That's correct. I mean, I think for the near term, we still are very much overweight equities, cash, even gold. Now, as you move further out, we would tend to move much more towards fixed income and governments and high-quality equities to sort of reflect that point of view.
And when you say equities, is it a bias on U.S. equities, or are you thinking about other global markets as well?
It is principally on the U.S. market. We've seen a number of the S&P 500 companies report. They've beat earnings. Our expectations is for the S&P 500 companies to generate 10% year-over-year return. So while it's a little bit expensive in the U.S., we still think it's very high quality. And then to a lesser extent, as we think about rates coming down, we think the emerging markets could be an interesting place to be.
I also note that you are sitting on cash as well. Why is that the case? Is it because you want to have the gunpowder, so to speak, to get back into these markets, or is it just concern about some of the risks that may materialize, be they geopolitical or elsewhere?
I think it's all of the above, plus the fact that you're being paid and rewarded to be in cash.
Right, of course, yeah.
Exactly.
Interest rates are a lot higher now. Specifically on geopolitical risk, though, is there enough geopolitical risk premium priced in to global assets right now?
It would appear that it's not as priced in, and that's one of the risks to the scenarios, is if tensions really flare, there's supply chain issues, energy shock, that could obviously change the picture in terms of the overall growth of the global economy, as well as the picture on overall inflation. That said, I would say where we focus the most is really looking at the quality of the labor numbers. And as much as we noted, obviously jobs were down from what was expected, unemployment slightly up, the quality of the jobs being created today are lower quality, tend to be part-time workers, even full-time workers are not able to get the full number of hours that they want. And so our expectation is that there is weakness there. The number of job openings have been declining, and so we think that wage inflation story is going to be the major story to focus on in the coming months.
And just a final question, because I'm getting the complete view of your asset allocation here. You also mentioned that you're underweight commodities. What is the view underpinning that?
It's really that we're looking at overall global growth. We're generally in line with IMF for major economies, with maybe the exception of the U.S., where they're looking for 2.7% growth. We're closer to 2% growth. And so for that reason, just the global growth backdrop makes us less bullish about commodities ex-gold.
Very clear. Well, we've gone through all of the asset classes and your rationale for moving to Dubai. Thank you so much for joining me on the show today.
Thank you.
Wonderful to chat to you. State Street Global Advisor CEO Yie-Hsin Hung. Now for a look at some other stories we're following. Chinese President Xi Jinping is in Paris as he kicks off a three-nation trip through Europe. His first visit to the region in 5 years is aimed at stabilizing ties in the face of mounting trade tensions. The EU has been forging a more unified voice with Washington in opposing China's capacity for cheap exports and perceived national security risks. Xi's trip includes Hungary and non-EU member Serbia. And the U.S. is in talks to lead a group of allies that would give as much as $50 billion in aid to Ukraine. The massive outlay would be repaid with windfall profits from frozen Russian assets that are accruing interest, mostly in Europe. Sources say the plan is being discussed amongst the group of 7 nations, with the U.S. pushing to have an agreement when G7 leaders meet in Italy in June. And Jose Raul Molino has been elected as Panama's new president. The former security chief has pledged to revive the economy and shut down migration routes to the U.S. Molino was the stand-in candidate for disqualified ex-president Ricardo Martinelli. He takes office on July the 1st. Coming up, with Riyadh Air's first commercial flight set to take off next year, we'll be speaking to the CEO next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Riyadh Air, Saudi Arabia's newest airline, is aiming to launch its first commercial flight next year. The carrier will be targeted at tourists as the kingdom invests billions of dollars in attracting visitors. Let's bring in Tony Douglas, Riyadh Air CEO. So, first commercial flight to happen in 2025. What needs to happen between now and then in order to take to the sky, so to speak?
Joumanna, good morning. First of all, it's fantastic to be in Dubai for ATM week and obviously Arabian travel. That's what it's all about.
Of course.
So Riyadh Air going live summer next year, probably the biggest startup that this region's seen within the last 40 years. The kingdom desperately needs better connectivity, connecting, of course, its citizens to the world and the world to the Kingdom of Saudi Arabia. So at the moment, we're scaling up at incredible pace.
Yeah.
And last year, we were teasing everybody with what we're doing. We're going to reveal a lot more in the coming months.
Oh, I like that.
Fashion. Think of Paris. Think of Paris in the summer. Couldn't be a better place to release our cabin crew fashion. Think Catch Me If You Can. Think DiCaprio going through the airport. In those TWA days,
yes.
Think style, elegance, grace. Think Riyadh Air with a modern twist. Think about that. Paris. Later on in the year as well, all of the digital promises we've been making, we're going to reveal them, so the technology that we use in lots of other ways in our normal lives will come to the world of commercial aviation.
Well, you're teasing a lot of announcements. Hopefully you're going to make them on Bloomberg right here with me. But when it comes to the fleet, I'm very interested in what you are planning on doing there. I know last March you announced that you had ordered 72 Dreamliner jets, but in November you also said that you were going to make an announcement regarding a, quote, sizable number of narrow-body aircraft in the next few months. It's now May, obviously, and we still haven't got that announcement. Why the delay?
So we need a very large fleet. We're going to make a number of additional orders. You're absolutely right, Joumanna. We made a big order last year with 787. We will be making a narrow-body order. We'll probably be doing another large order after that to build us up to scale because, as I referenced before, one of the biggest startups in recent history. We're talking at connecting to well over 100 destinations, so we need that big fleet.
Well, of course, in this respect, you're dealing with Boeing, and there have been many issues sort of prevailing at Boeing, change in management, safety concerns. Let me just ask you a question about the delivery schedule. Because of everything that is happening at Boeing, do you expect there to be a delay in terms of the delivery of these jets?
I don't think there's a day that goes by at the moment without Boeing being in the headlines, perhaps for many of the wrong reasons. Have they got challenges? Yes, they have. Do Airbus have challenges on delivery conformance? Yes, they do. So it's a kind of risk that we're very conscious of. And one of the things about a startup, of course, is we have no legacy. That's a real gift. However, the flip side of that is we don't have existing aircraft where we can extend leases. We don't have a network where we can play around with it if they deliver late. So our focus is on our supply chain to support us as a startup. We are different as a function of being that startup, and we need special care.
Have there been discussions around the terms of the deal regarding the narrow-body jets?
Yeah, so we're there in terms of narrow body. There's just too much noise in the marketplace at the moment, so we don't think it's appropriate to make any announcements until we need to.
Right.
So again, tease and reveal.
Yeah.
Joumanna, hold that thought.
Okay. One more question on Boeing, because it is important, and our viewers do care a lot about safety. What needs to be done at the management level to allay people's concerns about safety of these planes? And you being one of their customers as well, what would you like to see out of new management, the new CEO?
So I think everybody understands that the safest form of travel is commercial aviation. There's no question. The statistics make that quite clear. There have been unacceptable situations that Boeing have been dealing with in recent times. Again, all over the media, everybody's well aware of it. Quality management systems are non-negotiable. They need to be rigorously adhered to in the world of commercial aviation.
Yeah.
And I think this will act as a reset for Boeing leadership. We had a great relationship with the previous leadership team. I'm actually going out to Seattle from here, Dubai, tomorrow morning. We've got a great relationship with the team going forward. But just like Airbus, just like all of the rest of us in a safety-conscious industry,
of course,
they've got to stay absolutely focused and get back to basics.
No, absolutely. Very clear. Let's go back to that 2025 launch. It's not just about the planes. You've also got to hire people. You've got to hire cabin crew. You've got to hire pilots. How difficult has it been to attract talent? Because we hear about a crunch going on in that space.
So I think we've been very fortunate up to now, but we don't want to get ahead of ourselves. Our first cabin crew actually started this morning.
Great.
Talk about great timing. Our cadre pilots started just over a month ago. So we're getting into that stage now where in September we'll start flying for our test flying for our AOC, our certification process. But the statistic that really amazes me, and I can't even give a good explanation as to the reasons why, go on riyadhair.com. Like all good websites, there's a career page. On the career page, it allows you, if you're pilots, cabin crew, management, engineering, to load your details up. It takes some time, so it's not just my name's Joumanna, send, and you forget.
Well, I just started at Bloomberg, so I'm not going to start applying. But
well, think about where next, because up to now, and this is the bit, Joumanna, that's really pleasantly surprised us, 1.1 million people have applied to be considered to be part of the Riyadh Air family, and that's simply incredible.
Is the compensation more competitive than other parts of the market? Are you paying up for these applicants?
So that's 146 different nationalities in terms of those applicants. I think primarily what's attracted them is it's been decreed by His Royal Highness. So most people would conclude it's not might happen, could happen, or should happen. It's going to happen. It's a fresh, vibrant, innovative brand, and it's commercial aviation, and everybody loves commercial aviation.
Final, very quick one. I was coming back from Riyadh last week, and I got on one of the biggest planes I've ever seen, a double-decker plane. Would you say that the Riyadh-Dubai route is going to be one of your most profitable routes when you launch next year?
Almost certainly, yes. I think in the World League table rankings of most profitable routes, I think Dubai-Riyadh comes in at number 6. I think number 4 from memory is actually Riyadh to Jeddah. The kingdom is alive with energy, economically vibrant, and all roads lead in that direction at the moment, Joumanna.
Tony Douglas, that is a great place to leave it. Thank you so much for joining me on the show, and good luck with ATM this week, Arabian travel market. Tony Douglas, Riyadh Air CEO. Thank you. Up next, we are going to be looking at how climate change is destroying livelihoods in East Africa. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Let's turn to East Africa, which is bracing for more floods. Hundreds of lives have been lost across the region in torrential rain that began in March following years of drought. Kenya's president has postponed the reopening of schools as flood-related deaths passed 200. Let's get the latest from Jennifer Zabasajja, our Africa correspondent in Johannesburg, and is going to be my friend on this show now that we've officially launched Bloomberg Horizons Middle East and Africa. Wonderful to have you with me. But, you know, for now, let's just start with what is happening in East Africa. What is the situation across the region right now?
Yeah, Joumanna, great to be on the show with you. Thanks so much for having me. Listen, the situation is getting very dire. As you mentioned, of course, these rains have just been pouring on and on, even more so than East Africa typically anticipates around this time. So the death toll has surpassed at least 400 people. Hundreds of thousands have been displaced. And as you mentioned, we heard Kenyan president deciding to postpone the opening of schools. But he's also receiving a bit of criticism, I guess not just him, but the government in general, for the lack of preparation here and also poor infrastructure that has not been able to withstand such a dramatic event. And as I mentioned, this is typically rainy season for East Africa, but the El Nino weather events is what's making this weather phenomenon what many people are calling more severe than we've ever seen. So it's in Kenya, it's also in Tanzania, Ethiopia, Burundi, that is all really suffering these dramatic effects. And the concern really, Joumanna, is what happens next. Of course, as we mentioned, rainy season, typically good for harvest, and we had seen this be a pretty good harvest season, but now with these torrential downpours, the question is, how is this going to affect movement of people, of food, of fuel, of everything, the livelihood that people are really focused on here? And could this potentially create even more dramatic food inflation for this region, in addition to the humanitarian situation there?
Jennifer, thank you so much for the latest. And of course, something that we are keeping an eye on. That was Jennifer Zabasajja, our Africa correspondent in Johannesburg. I'm going to leave you with a look at how markets are faring into the European Open. But that is it for Horizons Middle East and Africa.